they are joining or not. But until others join, first let me know if I'll have any doubt in the assignment number 2. Can I see the assignment? Is it visible? Shanali? Before I brief, let me
Yes,
know
sir.
any specific doubt on this. Assignment number 2 first, before we move on to the assignment number 1. Any doubts? Shanali, any doubts?
So for the calculations,
Okay.
do we have to cut that relevant portion and embed it to the assignment, or shall we attach it as a separate one, the financial report?
It has to be separately added.
Okay.
Okay. Calculation part is not relevant, but you have to find out the ratio for the both companies. Also, I have clearly indicated the recent 2020 results, because sometimes you are unable to get 2021. That's why I told you to do, get the 31st December 2020 reports, right? And you'll have to clearly do the analysis on that. I'm just expecting you all to do the analysis, gross profit margin. So company A 10%, company B 15%. Why that is 15%? How many percentage is more? Why this percentage is more? Due to the cost, they are reducing the cost, or due to the what more sales? Likewise, we have to do the elaboration. Clear, Shanali?
Yes, sir.
Okay, that is what I have expected from the assignment number 1. There are few ratios that I have highlighted. Gross profit margin, net profit margin, return on capital employed, acid test, current ratio, gearing. Gearing is a very important part, right? You'll have to elaborate. You have to check the gearing of both companies. What is a high geared company or low geared company, right? So net profit, why the net profit is the first company is more than the what? Second company, due to what more operating expenses, or due to what more gross profit. Likewise, you need to do the analysis. I hope you understood the task number 1, correct?
So is there a word count at all for this?
Sorry?
Is there a word count that we have to keep?
So I have told the clearly 2,500 words for the total word counting. In the assignment, when I was doing an assignment brief, I clearly told them 2,500 words. I don't know whether you all have attended that class or not. For both assignments, separately 2,500 words each assignment. Clear? So maybe 100 words plus or minus, no problem. So until 2,400, no problem.
So the company I selected, I found the financial reports for 22 and 21 both. So is it okay if I compare it between the 2 years?
Yeah, between 2 years, but I would prefer between the competitors. Rather doing elaborations with what you call another year, if you do a elaboration with another company for the another reports, it will be the best way to understand what your knowledge. So best example is what you can take. One side is what Dilma, on the other side is what Bogavantala. The example that I'm telling. So, but if you would have taken 21 and 22, no problem. You can do analysis, because that's why I have mentioned over here. No, annual reports year earliest than the 31st December must be obtained through the published financial statement, discussion with the officer, selected company, right? So when you are calculating, but you can do a both period or else but another competitor. So if you do a competitor, that will be great. Also, when you are giving an introduction, don't forget what is your company, which from which company to which company that you are doing about comparisons. You know, when you are doing an introduction, you have to say this is the our main company. But Bogavantala is our main company. This Bhogavantala only is doing a comparison with what? Dilma. Or you can take a Manji and Maliban. Your Manji is your company. From Manji, doing a comparison with what? Maliban. Clear, Shanali?
Yes, sir. Thank you.
Okay. So the second task is explain the, because here I can't explain the way of calculating gross profit margin, net profit margin. That of course we are done where in the class. That is in the class. That is not an assignment brief, right? Task number 2, explain the current challenges faced by the industry. So you know, because since we are doing a comparison between two companies, for those company, what are the current challenges? So that's very simple. So now only you are escaping from what COVID. So you can talk about that part. And sometime you may talk about if it is a what manufacturing company, Manji and Maliban, you can talk about the raw material cost is very high nowadays. Wheat flour cost and all. So you can do, I mean, that's a very theoretical questions, right? Task number 3, describe the working capital position of the company. First of all, you should brief what is meant by working capital. Then you can compare the working capital between the two companies. So you know what is meant by working capital. Working capital, can you all hear me?
Yes, sir.
So working capital mean net current assets. Another name is current assets minus current liability. A very simple English word, how much the money that you have to do what? Your day-to-day operation. So then you can check how the working capital position of the what? Manji, and what is the working capital position of that Maliban, who is in the what healthy situations. So likewise, you can elaborate the task number 3. So here the major marks goes to what? Task number 1. Task number 1. Around 60 marks goes to what? Task number 1, because some of the calculation should be carried out and you have to do the interpretation as well. Look at, I have mentioned here, calculate the important ratios and interpret. Interpretation can be done with competitors or what? Another financial year. So it's not wrong if you would have taken another financial year, but I would prefer myself to gain or to learn some extra knowledge, go with the competitors. Then you will be talking about the both companies. Either clear? Either clear?
Yes, sir.
Yes,
And
sir.
don't forget to give the what you call conclusion and references as well, right? Conclusion, references and all, because recommendation also you can give if you want. It's up to everything. Only I have expected to give 2,500 words. Clear? Right now, anything that you need to ask apart from that for this assignment? Any specific ratio that you have a problem on this? It's not compulsory the ratio of what I have highlighted. If there are any other ratios that you can calculate for both company, you can calculate. So for example, only I have highlighted few important ratios over there. Gross profit, net profit, return on capital employed, receipt test, current ratio, gearing ratio. So gearing, you can detailed explanation can give about the gearing. These days the companies are what more geared their positions. Right, because don't forget to give an introduction. Don't forget to give a what you call conclusion. Don't forget to give the what references. These are very important. Any questions? Any questions?
No, sir.
Shall we jump into the second one? Sandali, do you have any questions?
No, sir. All good.
Lasanta? Lasanta, any questions?
No, sir. It's okay.
Ainkaran? Mohammed, any question? Shall we move on to the next assignment?
Yes, sir.
Okay.
Okay, sir.
Okay. This is another important assignment that I have brought since why this topic which has been introduced, but this time assignment number 2, assignment number 1. Correct? This assignment. Can you all see the assignment?
Yes, sir.
Okay.
Yes.
So here we talked about the flex budget. So the main part is here. The concept is what? Flex budget. So now, before we move on to the flex budget, you have to make sure the cost classification part based on the what? Behavior. So anybody who can elaborate me based on the behavior, what are the 3 types of cost that we have learned where in the class? Or forget about everything in management accounting. What are the 3 mainly types of a cost that you would say? So that was done where in my first sessions or first class. If you do not know that first class what I have taught you, it's difficult for you to understand the flex budget. That's why I'm asking from you that question before I start this assignment briefing for what assignment number 1.
So
You have to
fixed cost, variable cost, and semi-variable costs.
Very good. Absolutely, you are correct. Right. Now, can anybody who elaborate me what is exactly, because in management accounting, we can bring all our cost. You talk about electricity, telephone, likewise, there are number of types of a cost where in the company that you would see where in the practical circumstances. You would bring all these 3 types of all the type of a cost under what? These 3 heading in management accounting. Therefore, mainly in management accounting, but there are 3 types of a cost. One is about fixed, another one is what? Variable, third one is about semi-variable cost, right? So now, what is meant by variable cost first? What is meant by variable cost? Come on.
Cost that keeps changing according to what the company produces or sells.
Yeah. Variable cost means the cost which will change, vary from the name itself. You can. That's why I'm telling you, because I'm asking this question from everyone. Only 1 or 2 are giving me the answer. The rest I don't know whether they all know or not. Because if you do not know those basic stuff, you can't understand what you call this flex budget. So this flex budget is all about what? That 3 types of a cost. As long as you understood these 3 types of a cost, you can do the flex budget part. So if someone asks from me, just brief me or just how to get the answer for this question, it's virtually impossible. I can give you the answers only, but I can't explain to you the flex budget part. To understand the flex budget, you have to make sure first what? These 3 types of a cost, variable cost. So what you said was correct, but there's a small condition. Variable cost tend to vary according to the activity level with the what? Same proportion. Same proportion. What is meant by same proportion? When you're manufacturing a shirt, to make 1 shirt, you need 1 meter fabric, which is $10. 2 shirts, 2 meter fabric, which is $20. 3 shirts, you need 3 meter fabric, which is $30. That is what you call same proportion, linear relationship. But practically, that is not a case. Practically, sometimes we will be getting the discount. It may get changed. But theoretically, we are assuming variable cost per unit will remain constant, which means what? 3 unit 30, per unit is what? 10. Per unit is 50, per unit is what? 10. So that is all about what? Variable cost. Example, raw material, labor charges, direct labor charges, and the direct expenses, royalties payment. These are the best example about variable costs. Is that clear?
Yes, sir.
Okay. Others, Shanali, are you okay? Others, are you all okay?
Yes, sir.
Right. Okay. Second one is what? Fixed overhead. fixed overhead, it will remain constant. It does not change. Whether you are manufacturing a 1 unit, same amount, 2 units, same amount, 50 units, same amount, 1 billion units, same amount. That is what is known as fixed overhead. Best example is what? If when you are coming for what you call physical classes, there will be what? Classrooms. So classroom rental. If there is a 1 student, they are supposed to pay 50,000 rupees as rent. 2 students, once again the same amount. 3 students, same amount. 4 students, same amount. That is what is known as fixed overhead. Let's say you are working in a production department where in the company, right? Your salary is fixed salary is 50,000 rupees per month. If you are producing 100 units, 200 units, 300 units, 1 million units, 1 billion units, you'll be paid 50,000. That is what is known as fixed overhead. Clear?
Yes, sir.
Okay.
Yes, sir.
Third one is what? Semi-variable cost. Semi-variable cost means it has both elements. You have a fixed overhead and you have a variable cost. The best example is electricity. So electricity, if you look at the electricity bill, there will be a fixed component. Whether you are used or not, the fixed component is there. Right? That does not change fixed overhead. If you would have consumed the 100 units of electricity, then that fixed rental plus what they will charge the variable cost. Let's say 100 unit per unit is what, $5. Then 100 times 500 plus what, the rental. That would be your total cost. That is what is known as semi-variable cost. Another example is what? Telephone. Telephone, you have a fixed rent. Whether you use or not, you're supposed to pay what? That fixed rent. The fixed rental is what? Let's say 1,000 rupees. Then they will charge the variable cost based on the number of calls that you make. Clear? Clear?
Yes, sir.
Yes, sir.
So that is all about what? Semi-variable cost. And then again, I have explained from the semi-variable cost, how to identify the what we call fixed and variable. Say for an example, shall I switch to Excel? Just see whether you can see the Excel sheet. Can you see the Excel sheet?
Yes, sir.
Right. Let's say this is units. You can see my writing, no? Not
Yes.
writing, I'm sorry, typing.
Yes.
Total cost, or another name is what? Semi-variable cost. Right. Let's say 1,000 units. Right. Your semi-variable cost is, let's say, 100,000. $100,000. At 2,000 units, your semi-variable cost is 180,000. Right. Now the requirement is calculate variable cost per unit. Calculate total fixed cost. Right. These are the requirements. So the semi-variable cost is already, it's included both variable and fixed. Correct? So now, if you look at the question, 1,000 unit 100,000, at 2000 is 180,000. Calculate the variable cost per unit and the total fixed cost. And the third question, at 3000 unit, what is the TC? Total cost. These are the three questions. Now you should know the theory. This is the starting part of the flex budget. Starting part of the flex budget, right? At 1000 units, you know 100,000 is total cost, which is a combination of what variable and fixed. At 2000 units, once again, total is 180, combination of the total VC and the what fixed cost. Now we are going to find out the first variable cost per unit. So variable cost per unit, equal. Now the theory, when you are changing your production from 1000 to 2000, your cost has been increased. 100,000 has become 180,000. This increment amount due to variable cost or due to fixed cost? When you're increasing your production, your cost also total cost has been increased. That increment amount which took place due to variable cost or due to fixed cost? Come on. Shanali? When you're increasing your production 1000 to 2000, you should know what is meant by variable cost, what is meant by fixed cost. If you do not know what is meant by variable and fixed, once again, you can't do this part. When you're increasing your production from 1000 to 2000, your cost total also has been increased. Total means there are two elements, variable and fixed. This increment amount has been taken place due to which type of a cost?
Variable costs, sir.
Absolutely, you are correct. Because already we all have learned variable costs tend to vary according to the activity level with the same proportions, right? Just get me a minute. Sorry. So it's very clear because variable costs tend to vary according to the activity level, whereas fixed overhead always remain constant. So when you're increasing your production, your total also has been increased. That is due to what? Variable cost. Therefore, how to calculate variable cost per unit? 180,000 minus 100,000 divided by 2000 minus 1000. So that would give you $80 per unit. Is that clear? Is that clear?
Yes, sir.
Any questions on that? No.
No, sir.
Right, okay. Now, to calculate the total fixed cost, as I said earlier, the semi-variable cost is the combination of what? Variable and fixed. Therefore, at 1000 units, you know TVC, total variable cost, plus total fixed cost equals to what? Semi-variable or total cost. Agree with me? Not only for at 1000 unit, at any particular level, at any given point of time, variable and fixed cost equals to total cost. At 1000 units, per unit variable cost is 80. Therefore, to make 1000 unit, what would be the total variable cost? At 1000 unit, what would be the total variable cost? Per unit variable cost is 80. To make 1000 unit, then what would be the total variable cost?
80,000.
80,000. That is 80,000. 80,000 plus TFC, total fixed cost, equal total cost we know 100,000. So TFC equal. So here this is 80,000. No, sorry. Therefore, TFC equal 20,000. Is that clear?
Yes, sir.
Even if you apply at 2000, you will be getting same answer. 2000 times, because variable cost per unit is 80. 2000 times 80 is how much? 160,000. Total cost is 180,000. Therefore, 20,000 is fixed cost. Already we learned fixed overhead will remain constant. Even for 5,000 unit, the fixed overhead will be same amount. Clear? Now the third question, at 3,000 unit, what is the total cost? At 3,000. At 3,000 units, right? You know TVC would be 3,000 times what? 80 plus what? Fixed cost will be the same. It does not change. That is how much? 20,000. Therefore, 240, 20, 260,000. Is that clear? Chanali, are you okay?
Yes, sir.
Others, any questions?
Clear, sir.
Sorry?
No, clear, sir.
Okay. As long as you understood this concept, now we can do any type of what? Flex budget question. Now let's move to the what? Because I can't discuss the same questions now because it's not nice, no? Because if I discuss the same question, so I will try to explain only one components over there, right? Because if I give you, then it will be ultimately I'm just giving the answers, right? So what is exactly meant by flex budget? Flex budget means we have learned in the class actual minus budget equals to variance. Variance, there are two types of variance. One is adverse, another one is what? Favorable variance. Actual minus budget equals to what? Variance. Adverse mean what? Loss. Favorable mean what? Profit. Let's talk about the first cost. Cost is opposite of what? Income. Cost is always opposite of income. Actual, let's say 1,000 minus budget, let's say 8,000. Now you know the variance is how much? 2,000. Difference is 2,000. Clear?
Yes, sir.
That clear? 10,000 minus 8,000 equals to 2,000. Clear? Right. You tell me now, is that adverse or favorable? Are you happy or sad?
It's adverse.
Adverse, because it's loss. You know why? you estimated your cost would be what, 8,000. Ultimately, you paid more than what you have estimated. Therefore, basically, what, it's loss. You are sad, unhappy. Therefore, it's what, adverse. Adverse means what, unhappy. If it is revenue, let's say you got the actual revenue 10,000, expected revenue 8,000. Therefore, 2,000 would be what, favorable. Agree with me?
Yes, sir.
Because you are happy. Therefore, this is always opposite of what? Cost. That's a basic way of calculating variances. Is that clear? Are you clear with the expenses and the income? Are you all clear?
Yes, sir.
Okay. Now once again, I'm going back to what, another advanced part. So once again, I'm asking the question. Let's say this is 15,000, right? Minus actual is 50,000. I am talking about the cost. This is 12,000. Then the difference is how much? 3,000. Adverse or favorable? Adverse or favorable? I'm talking about the cost part here. Don't forget, not the revenue. Otherwise, you will get confused. Right? So 3,000. Adverse or favorable?
Adverse.
$13,000 minus 13,000. Then equal to 2,000. You said sorry, we'll put this another figure. Same as the previous one. 3,000. You said adverse, correct? Correct? Correct or wrong?
Yes, sir.
Yes, sir.
Right. That is what I have told you. But as a management accountant, we need to do the what further investigations on this. Why? Sometime you estimated this 8,000, sorry, 15,000. You sorry, 12,000 no estimated. I'm sorry. This 12,000 you estimated for 1,000 units. So here 1,000 units. You estimated 12,000. But 15,000 that you paid or you have actually incurred 15,000, that is for 1,200 units. Units. That is 15,000. Now tell me, is it correct or wrong? Is it correct or wrong? This calculation, when I was asking from you all 15,000 minus 12,000, you said 3,000 as adverse. I said earlier it was correct. But now I'm asking this question from you all. The 12,000 that you have estimated for 1,000 units. Whereas actually you have paid 15,000 for 1,200. Now can you do the comparison between these two? Is it correct or wrong?
We can't compare.
Why?
Number of units are different.
Correct only when if the activity levels are same. If both are 1,000 unit or if both are 1,200 or if both are 500 unit, it will be all right. But here activity levels are different because when you are doing a prediction at the beginning, because budget will be set at the beginning, so you will do the predictions only. But actual, it should not be the same as the what your prediction. Then if that is the same, you will deserve to be a god. Am I correct? Because you can't do the exact predictions. No? Based on your information, you try your level best to do a what? Your proper predictions. Correct? Is that clear?
Yes, sir.
Okay. So now what we can do? So now in this occasion, I said 3,000 is wrong. No. So now this is what budget. This is what actual. Now what we can do? Can we change the actual? Can we change the actual?
No.
It's always what as it is. That does not change. Can we change the budget? Can we change the budget? Can we change the budget? So how are we going to change the budget now? So budget will be prepared for how many units? Because you can't change the actual. Actual was what? 1200 units. Budget was set at for 1000 units. Now how are you going to change your budget? Budget for how many units?
1200.
That is what is known as flex budget. If you change the budget based on the actual activity level, you're changing your budget. What is the budgeted cost for how many units? What is the budgeted cost for how many units?
1,000.
1200 units. That is what is known as flex budget. I hope now you understood exactly what is meant by flex budget, correct?
Yes, sir.
Yes, sir.
So now flex budget is, flex budget should be prepared for 1200 units because same as what? Actual. So let's say, because I have not shown you yet how are we going to prepare flex budget. Let's say you prepare a flex budget 1200 units, which is what? Some amount, right? I can't put the proper amount at the moment. Let's say that's the amount. Now what you can do is you can compare the actual with what? Original budget then flex budget. Actual minus you can identify the what? Proper variance. That then only the variance is what? More accurate. Agree with me? Agree with me?
Yes, sir.
Okay, now let's go back to how are we going to prepare a flex budget? How are we going to prepare a flex budget? So the way of preparing the flex budget, once again, depending on what type of a cost, whether that is what? Variable cost or fixed overhead or semi-variable cost. If it is a variable cost tend to vary according to the activity level. Therefore, 12,000, $12,000 for 1000 units. Therefore, 12,000 divided by 1000, correct? Multiply by what? 1200 units. Clear? What is the cost for sorry, $12,000 for 1000 unit, and what is the cost for 1200 unit? Is that clear? Is that clear?
Yes, sir.
That is correct only when if that cost is what? Variable cost. If that the cost is what? Fixed, what is the answer? If that is fixed overhead, because if that cost is what? Variable, then what you would do? $12,000 divided by 1000 units times 1200 units. Then you will prepare a what? Flex budget. If it is a what? Fixed overhead, come on, getting late. If it is a fixed overhead, we have learned just before what is meant by fixed overhead. If it is a fixed overhead, how to prepare a flex budget? Generally, what is meant by fixed overhead? What is meant by fixed overhead?
Fixed means it won't be changed along with the number of product.
Yeah, therefore, it will be the same amount. If this is what 12,000 with 12,000 now, for here also it should be 12,000. If it is a what? Fixed cost. That does not change. A fixed overhead will remain constant. That's the problem. How then, if you do not know these part, how to calculate the flex budget? You won't understand. You will keep on giving the complaint only. We don't know. We want to understand different complaint that I came across. I've been lecturing here almost what 4 years here. Apart from that, I'm lecturing 14 years. ACCA, CIMA, CMA, right? MBA and BBA top up, and University of West of Scotland degree, right? I have a sufficient experience. So if you go and tell that we didn't understand, we that's not my problem. That of course you'll have to take the responsibility yourself. At the very outset, I have clearly told you, if you are not coming for the classes for what finance subject, it will be disaster for you. If you are coming from the what you call financial background, it's not a problem. If you would be able to understand. Also, that this subject can be done not as a courtesy. You have to gain some knowledge. You will have to apply this part by the practice. Otherwise, there's no recognition for what your title. Title can be obtained anywhere either. Right. Come back to the point. Variable cost now. So it's based on the what? Number of units. Therefore, 12,000 divided by 1,000 times 1,200. If it is a fixed cost, it will remain constant. If it is semi-variable cost, then you have to use the what? This method, high-low method. Separately, you'll have to identify what is the fixed, what is the variable. Then you'll have to calculate what is the total. At 3,000, what is the total cost? Same way, you have to calculate at 1,200 units, what is the total cost. After separating the fixed overhead, then you can identify what is the variable amount. Then you can calculate it. Is that clear? Is that clear?
Yes, sir.
Yes, sir.
Yes, sir.
That is all about what? Flex budget. Now I'll try to explain to you all only one component over here. Right. Look at here. I will not show you any calculations over here. I'll because it's not nice because it's a questions, no. So once again, you have to do the same introduction, right? So here the main part is what calculating flex budget variances, and for that variances you have to do the what? Interpretation. Prepare a profit statement showing the original budget, flex budget, and the actual results. So all three columns you have to do separately. So original, it's very easy. What is the original production sales unit, original sales income, original material cost, or everything for original. Actual na for everything for actual. Flex now, you remember how are we going to prepare a flex budget, because the flex budget will be prepared for what? Actual information, which means what? So the budget should be redesigned for what? 84,000 units. That is what is known as flex budget. Clear? Flex budget will be prepared for how many units? 84,000 units. Is that clear?
Yes, sir.
Okay, now I'll explain only the direct material component. Direct material, look at the budgeted information has been provided for how many units? 67,200 units, correct? So 67,200 units. To make that unit, we are using how many kilogram? 5,040 kilogram, right? We are using how many kilogram? 5,040 kilogram. Our total cost is how much? 4,032. Therefore, 4,032 divided by 5,040, then per kilogram cost is 0.8. Agree with me?
Yes.
Per kilogram cost is what? 0.8. Right? Now to make 67,200 units, you have used how many kilogram? 5,040 kilo. Therefore, each unit, how many kilogram which is needed? How to calculate? 67,200 unit, you need 5,040 kilo. Therefore, per unit, how many kilo which is needed? Come on, guys. Very simple, grade 5.
67,200 divided by 5,040.
No, 5,040 divided by 67,200.
Sorry,
Very-
yeah.
5,040 kilo has been used to make 67,200. No? Therefore, 5,040 divided by 67,200, which is what? 0.075 kilo. Agree with me?
Yes.
Therefore, please take down the what do you call information. Material rate is what? 0.8. Am I correct? Per kilo. Material price is, I'm sorry, not rate, material price. Material price is $0.8 per kilo. How we have calculated, if you want the breakdown, 4,032 divided by 5,040 kilo, correct? Next one, material requirement to make a unit, 5,040 divided by 67,200 units. 5,040 kilo divided by 67,200 units, which is 0.075 kilogram. Right. Now we are going to prepare the flex budget. Flex budget we are going to prepare for how many units? 84,000 units. We are going to prepare flex budget for 84,000 units. Therefore, material cost would be, flex budget material cost would be 84,000 multiplied by 0.075. Am I correct? Times the rate is 0.8, which is $5,040. $5,040. Is that clear?
Yes, sir.
Therefore, once again, the breakdown is each unit will require 0.075 kilo budgeted requirement. And the budgeted material cost is what? $0.8 per kilo. Now we are preparing the flex budget. Flex budget will be prepared for how many units? 84,000 units. Therefore, 84,000 material cost would be 84,000 times 0.075 times what? 0.8, which is $5,040. That is the flex budget for the material. Is that clear? Is that clear?
Yes, sir.
Yes, sir.
Same way, you'll have to try for all the others, but you'll have to make sure that fixed production overhead, because the fixed production overhead, even though if they would have given us about based on the direct labor hours, so we have to assume fixed production overhead. They say the labor hours, no, therefore you can try with the same number of hours, 3360. Same way, you'll have to do all the calculations. So now the task 1, prepare a profit statement showing the original budget, flex budget, and the actual results. Second part is what? We need to calculate the variances. When you are calculating variances, you know flex budget and the what? Actual. Flex budget and the actual. Task 3, explain the purpose of budgeting. Those are the task 4 also, theory part, as the company is 23, recommend an appropriate budgeting system for the company with a justification. What is the budgeting approaches that you are recommending for what? Because we talked about different type of a system. Rolling budget, incremental budget, likewise zero-based budget we discussed. Or there are 2 types of budgeting approaches. Top-down approach. That is what I'm expecting.
So there's a small issue. Yeah, in the assignment, it was shared in the Teams one. Task 4 was not there.
Either so. Can you have your private separately?
Yeah, sure.
Someone is doing a here private chat as well here. Mohammed Rumi,
Yes.
can you mute please? Thank you. Right, okay. Come back to the point. Someone who asked about the task number 4. If it is not there, leave it. No problem. You can only do only the first 3 tasks. No problem. Because I don't need to include again the task number 4, but mistakenly it was not there. No problem. Then you can focus on the first 3 tasks. So your major components would be the first task and the second task. Right. Any other questions? Any questions? Nandali? Nandali?
No, no, sir. All good.
Asanta? Do you have any question? Lasanta?
No, sir, clear all.
Okay. Shanali?
So for all the variances, then it should be actual minus the budget, right?
Once again, the same mistake. Flex budget.
Sorry, flex budget.
Yeah, because budget mean there are 2 types of budget that you have learned now. One is about fixed mean, another name is original budget. Fixed mean there are 2 names for the fixed budget, original budget and fixed budget. Because the original budget which has been given for 67,200, correct? So flex budget will be prepared for actual activity. That is what 84,000 or 82, I can't remember. Therefore, the variance should be calculated between what? Flex budget and the actual. Shanali, I hope you understood.
Yes, sir, right.
Right? Not for original budget and the actual. Then you are wrong. Ruan, any question? Ruan, the name that I'm seeing only this time. I'm not quite sure whether you have attended any classes.
Yes, actually, I'm in abroad, so it's a bit difficult to attend on the time. So, but I am referring to the all records, so now it's clear.
Where are you staying now?
In Saudi.
Okay. Okay, Ruan, you just have a look into that. And if you are coming from the financial background, it's not a problem.
No, sir, actually, I'm in marketing.
Darshana, are you okay?
Yeah, sir. I joined like 2 weeks ago, so I'm referring to the all lectures and like
Okay.
that.
Okay, Darshana. And Rumi, I'm sure that you are perfect. Am I correct, Rumi? Rumi?
Yes, sir. It's okay for me.
Yeah, because you were very good way in the class, and I hope that you understood everything. You wrote a come for this class, of course, because you are very good and you knew everything, Rumi. Am I correct, Rumi?
Yeah, yeah.
Poshita. Poshita.
Yes, sir. Poshita.
Oh, I'm sorry. Poshita.
Yeah, no worries. Yeah, all okay, sir. All good.
Okay. Aikaran. Aikaran. If I'll have any other specific question, you can put them forward. Ankaran, no sound from him. So I hope now you understood the problem where you all had. So you all have not gone through the beginning or the part. Since you all have not gone through the beginning of the part, if you do not know the basic, Shanali, I hope you understood my questions now. Shanali,
Yes, sir.
now
All
you
good.
will understand my position now. I hope you will understand my position. So because if someone come and straight away ask from the mid part of the assignment, very difficult for me to what explain that part. I'll have to start from what beginning everything. Step by step, I'll have to explain. Then only you will understand the Vadika. So all the other part, what I have started, you remember, Hilo method, variable, fix. That was our first sessions, first class. So that's why I said I can't halfway through I can't start it this part. Also just can you all hear me?
Yes, sir.
Yes, now we can.
The internet problem. So you know we are in Sri Lanka now. Shall we wind up the session then? If you do not have any questions. Shall we wind up?
Okay, sir.
Okay. Thank you very much. Wish you all the best for what your assignment, right? So because if you ask the question from me, can we clarify the assignment? But now it's very difficult. Now you have to do it yourself, right? You can't ask now any question because I have already given all the times to you all. Now it's time for you all. I hope but best assignment. See you for the good mark.
Excuse me,
Yeah, yeah.
submission date is 7th.
I'm so not quite sure, Rumi. Please check with your course coordinator.
Okay, sir.
So yeah, I'm sorry, extremely sorry. We don't involve this part. Only uploading this all things, then you know that deadline, submission date, they will need to with the students.
Okay, thank you, sir.
Sir.
Yeah.
Yeah, so the deadline was given as on the 7th, but can we go for an extension for another 1 week at least?
No problem at all. As long as you get approval from the what management. For my side is I have not given any deadline and all. I need, as long as if they are submitting for the marking, I will be marking the assignment and giving to them. You will have to speak to them, the management.
Okay, sir. Thank you.
Better, I think you can get there because you just request. I will also inform them to give some extra time for you all. Since
Thank you, sir.
yeah, some people who got stuck with the assignment. Therefore, I will speak to them and I'll give tell them to, give us some 1 week extra for you all. That's not a problem.
Thank
Right.
you, sir.
Okay, shall we wind up?
Thank you.
Okay,
Okay.
sir.
Thank you very much.
Okay,
Thank
thank
you,
you,
sir.
sir.
Thank you very much, sir. Thank you.